Hi, this is Rameez Ali with the Smart Money Podcast. Imagine a world where the biggest stocks, the giant of Wall Street, don't stop trading at 4 p.m. Eastern. Instead, trades continue around the clock, settled in seconds across borders or digital tokens instead of paper certificates. Imagine real estate, bonds, or art all fractionalized, global, and instantly tradable, available to anywhere and anywhere. It may sound like science fiction, but across Wall Street and the crypto world, momentum is building to bring this vision to life. Increasingly, industry players believe tokenization, converting real world assets into blockchain based tokens, will reshape how the global financial system works. They say it's not a peripheral innovation, but rather a full stack transformation that could eventually eat the entire financial system. In today's episode, we will journey into the unfolding financial revolution. What tokenization means, who's driving it, the risk and rewards, the obstacle ahead, and how it could change the way we invest, own, and trade. Part 1. What is tokenization? Definition and basic mechanics. First, what exactly is tokenization? At its simplest, tokenization is the process of converting ownership of a real-world asset, such as stock, bond, real estate, or artwork, into a digital token on a blockchain or distributed ledger. That token then serves as a digital representation of the underlying asset and can be traded, transferred, subdivided, or settled, depending on the design. Because it's on a ledger, ownership is transparent and verifiable. Smart contracts can automate many operational tasks such as payments, dividends, or transfers. Also, fractional ownership becomes much easier. One could own a small slice of a property, art, or a private equity position that would otherwise require significant capital. In essence, tokenization bridges traditional finance, TradFi, and decentralized finance, DeFi, enabling assets to be on-chain while connecting to existing legal, regulatory, and financial systems. What's driving the trend? Several forces are converging into this to drive interest. Technological maturity. Blockchains and smart contract platforms, Ethereum, Solana, etc., have improved in scalability, security, interoperability, and tooling. The infrastructure is more capable now than in earlier years. Institutional momentum. Major financial institutions and asset managers are already experimenting with tokenized versions of funds, equities, and money market instruments. For example, Goldman Sachs and BNY Mellon have collaborated to issue tokens tied to money market funds on blockchain infrastructure. Regulatory openness. In some jurisdictions, regulators are signaling a willingness to incorporate digital assets into regulated frameworks, though much of that remains unsettled. Commissioner Hester Pierce of the SEC, for instance, has emphasized that tokenized securities must still comply with securities law. Tokenization does not magically bypass existing rules. Democratization and liquidity potential. One of the most compelling promises is opening access. Tokenization could lower barriers to entry for retail investors, enabling access to traditional illiquid assets, think private equity, real estate, etc. Also, fractional ownership and a global investor pool may unlock more liquidity. Efficiency, settlement, speed, and cost reduction. Traditional systems are burdened by legacy processes, slow settlement, T+1, T+2, etc., intermediaries, reconciliation, and paperwork. Tokenization aims to streamline many of these processes, reduce friction, and enable near-instant settlement across time zones. Use cases and asset types. Tokenization isn't limited to stocks. Some asset classes currently being explored include equities, stocks, and shares. Tokenized versions of public or private company shares. For example, Robinhood has expressed interest in facilitating tokenized equity markets across jurisdictions. Money market funds, cash-like instruments. The example of Goldman plus BNY issuing tokens represents money market and share illustrates how cash-adjacent assets are being tapped first. Real estate. Tokenizing property means each token represents a fraction of a building, land, or development project. Private credit, private equity. Positions in funds or leading deals that could currently have lockups and limited secondary markets. Bonds, debt instruments. Corporate or sovereign bonds represented as tokens. Art, collectible intellectual property. Tokenized claims on art, music, rights, patents, etc. Other real assets. Commodities like gold, energy, assets, or infrastructure. The key is that the asset has underlying value and some mechanisms to anchor tokens to legal rights. Part 2. The players and strategies. To understand where we're headed, let's look at who's pushing tokenization and how they're doing it. Established finance and big asset managers. Traditional finance is not sitting on the sidelines any longer. Some initiatives. Goldman Sachs and BNY Mellon. As noted above, they are issuing tokens that represent shares in money market funds using private blockchain, infrastructure, and existing fund accounting systems. BlackRock, Fidelity. These asset managers are among the participants in tokenized funds, signaling interest in integrating digital asset infrastructure. Banks and custody firms. Many are exploring how to custody digital tokens, providing token issuance services, or facilitate compliance and accounting workflows. These incumbents bring legitimacy, capital distribution networks, and regulatory know how, all critical for real adoption. Crypto, DeFi firms, and infrastructure providers. And in parallel, crypto firms are trying to build the plumbing. Tokenized issuance platform, digital security platforms, example, Securitize, platforms that help companies convert assets into tokens, manage compliance, invest onboarding, think KYC ML, and secondary trading. Decentralized and hybrid exchange protocols, enabling peer-to-peer trading of tokenized assets, sometimes in a more permissionless or open fashion. Oracles and interoperability providers, connected tokenized assets to external price feeds, legal data, cross-chain bridges, etc. Custodian wallet providers, securing private keys, managing cold-hard custody for institutional clients. Retail and fintech firms. Platforms like Robinhood are trying to blur the lines between stocks and tokens. Robinhood CEO Vlad Tenev has argued that tokenization is inevitable and that tokenized shares would allow 24/7 trading, faster access, and emerging of crypto and stocks. Exchange app and brokers are exploring token-based listings or offering access to tokenized shares, private tokens, or fractionalized positions. These firms offer the distribution and user interface needed to bring tokenization into everyday users. So far, we've explored what tokenization is, who's leading the charge, and why both Wall Street and crypto insiders believe it will transform finance. But every revolution comes with resistance. Next time, we're going to dive deeper into risk, realities, and roadblocks. Let's see what's coming up in the next part. We'll unpack why liquidity isn't guaranteed even if everything's tokenized, how regulation and legal gray zones could slow down progress, the hidden friction between innovation and compliance, and what recent SEC statements really mean, and the security risk no one wants to talk about, from hacked smart contracts to lost private keys. In part 5, we're going to go through a sneak peek of the future scenarios. We'll paint 3 futures: a hybrid world, a disruptive world, and a cautious world. Which world are we heading towards? You'll find out in part 5. In closing, tokenization might be the biggest evolution in money since the internet, but before it can rebuild the system, it has to survive the system. Join me next time as we explore the risk and realities of tokenized finance. Before closing, I'd like to make a request from this group. Whoever is listening and following, if you could leave a comment on my LinkedIn to let me know that you were interested in this podcast and you've been listening, it would really help me since I'm not really monitoring the stats on this podcast. So again, it would really help me with the feedback. And if you could think of how I can improve, please let me know. This is a passion project at the end of the day, so I'm really interested in knowing your thoughts. Thank you. Bye.